Sir, we like to understand how the central bank could be the head of the all big baby, big daddies also like SBI and HDFC, because they have lot of I think efficiency, lot of manpower also, and larger portfolio. So how the central bank is doing co-lending, and what are your success, and also, and what is the lesson which you have got during this co-lending exercise, which can be helpful to the other partnerships also, and whatever the views have been given by the other partners or other basically panel speakers. If you want to comment on that, you want to cover up whatever the areas are left, that will be great actually, because everybody is waiting to listen to you also.
First of all, as you said rightly, yes, Central Bank of India, uh, that privilege we are having right now because we started very early in forging the partnerships of the NBFCs, understanding the intricacies of this co-lending model, and today I would like to share that we are having 25 NBFC partners, some of them major NBFCs with us, and also we have crossed the landmark of 11,000 crores, and coming year also we have set a very ambitious target of having another 25 NBFCs on our partnership with Central Bank. First of all my eminent panelists who have already specified the product processes, the how to uh, go way forward. I think so. They have covered most of the things. So definitely, as you said rightly, why the central bank could go far ahead. See, as rightly said by some of the panelists, that basically you would have to understand how the NBFCs, each NBFC's model works, and each NBFCs have different products which are even they are doing housing loan, then the method, the surrogacy method, the different methods are there. So the bank in their normal way, they are having their own loan policies. We are having our own means where we'll have to tweak to in line with those NBFCs. And once those NBFCs can match up with that, then naturally it will be much easier for us to do those business for those products for those NBFCs. So unless and until if we do not match up with them, if we do not modify the some of the policies, if we do not understand the model of them, then it will be not that easy for the banks to do the business. Otherwise, there is nothing much more in it. It's only to understand the model of the NBFCs, how they are working. As rightly said, each NBFCs differ from the other in way of their either collection or in their way of doing their businesses. So it's very important to know what is their USP, and accordingly we also try to match up that. And many a times we have seen after forming the partnership also, at times we have to come to change those products or modify those products because we find that it is not going ahead. See, when we start doing the business, it is not immediately that the business with the NBFC starts running. Sometimes it takes 3 to 4 months or sometimes 6 months to stabilize. But once it gets stabilized, so those NBFCs are also aware that now if they are to do that business for that product, so they will also modify accordingly. And once for them also it becomes easier, and then the relationship goes on a next, you can say, the next orbit. So these are the things. So it is not that in the first relation itself that all the things get sorted out. It takes 4 to 6 months, sometimes more. And once that gets stabilizes, then for different products we go ahead accordingly.